Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial secrets of big companies and uncover the truth behind the numbers. Today we are dissecting a report from FuboTV Inc, the streaming company that tried to take on the giants. Get ready to find out if they are making a comeback or just running out of steam. Before we start, if you love getting clear, straightforward analysis of these complex corporate documents, make sure you are subscribed. And if you want to chat with us and other finance enthusiasts, join our Discord community, linked in the description below. So what we have here is a Form 8K filing from FuboTV Inc. Think of an 8K as a report about big news or events that happen to a company that investors need to know about right away. This particular filing from the 7th of January 2026 is telling us about some recent financial maneuvers and also what happened after a major business combination. Back on the 29th of October 2025, FuboTV completed a big deal. They combined their business with Disney's Hulu live television business. This was a major move intended to shake up the sports and live streaming landscape. It sounds like a big step towards growth, but as we know, big deals often come with big financial implications. Now here is where things get interesting financially. On the 5th of January 2026, FuboTV took out a significant loan. They issued a promissory note, essentially an IOU, to Disney Enterprises Inc., which is part of the Walt Disney Company. The amount borrowed was a whopping $145 million. This loan was part of a commitment letter that was agreed upon back in January of 2025, around the same time as the business combination agreement. Essentially, Disney committed to provide this funding if needed. This loan isn't free money, of course. FuboTV will be paying 4.2% interest on it each year. This note is unsecured, meaning there is no specific asset backing it up if FuboTV were to default. It is set to mature in January of 2031, but there is a catch called a springing maturity. This means if FuboTV takes on certain other unsecured debts that mature before 2031, this loan could become due much sooner. The good news for FuboTV is they can pay back any part of this loan early without any penalties. This section is about making sure all investors get the same information at the same time. FuboTV is giving us an update on two types of convertible notes they have outstanding. These are notes that bondholders can potentially convert into company stock under certain conditions. First, let's talk about their convertible senior secured notes due 2029. The big business combination we mentioned earlier triggered a right for holders of these notes to sell them back to FuboTV at a specific price. This was called a tender offer, and it expired on the 6th of January 2026. The filing tells us that absolutely none of these 2029 notes were offered back for repurchase. This is pretty significant. It suggests that the note holders likely believe the company's future prospects are strong enough, or that the current market conditions make holding onto the notes more attractive than selling them back. Out of the approximately $177.5 million in these notes, outstanding, all of them are still with their holders. These will mature in February of 2029 unless they are bought back or converted before then. Next up are their 3.25% convertible senior notes due 2026. These are a bit different. Holders of these notes have until the 13th of January 2026 to decide if they want to sell them back to FuboTV due to the business combination. The filing states that about $144.7 million worth of these 2026 notes are still out there. FuboTV is planning to use the proceeds from that new $145 million loan from Disney to pay off these 2026 notes at or before they mature on the 15th of February 2026. This signals a strategic move to manage their debt obligations using the new financing. Finally, this report includes a press release dated the 7th of January 2026, which announces the issuance of that promissory note we discussed, and the fact that the tender offer for the 2029 notes expired with no notes being tendered. This is essentially a public announcement to confirm these key events. This last part just lists what documents are attached to this report. It includes the form of the promissory note itself, and that press release we just mentioned. So what is the big picture here? FuboTV completed a major business combination with parts of Disney's Hulu. They secured a $145 million loan from Disney to help finance their operations and manage existing debt. Crucially, their bondholders did not take the early buyback option on their 2029 notes, indicating confidence in the company's future. The company is also using the new loan to pay off its 2026 notes. Looking at this from a Warren Buffett perspective, a company that can secure significant financing from a strategic partner like Disney generally signals a level of trust and belief in the business. The fact that no one wanted to sell back their 2029 notes is a really strong positive signal from the market's perspective at that moment. It suggests that investors or note holders believe FuboTV's strategic direction, particularly after combining with Hulu's live television business, is sound and has the potential for future growth and profitability. However, we should remember that this is still a potentially risky venture. The streaming wars are incredibly competitive, and FuboTV is up against some of the biggest players in the media industry. The $145 million loan, while helpful, does add to their debt load. The springing maturity clause on that loan also adds a layer of complexity and something to watch closely. If FuboTV were to face unexpected financial headwinds and incur other unsecured debt that matures sooner, it could put pressure on them to repay the Disney loan quickly. In conclusion, FuboTV appears to be making a concerted effort to stabilize and grow its business following a significant strategic combination. The new financing and the market's reaction to their debt obligations seem positive in the short term, but the long-term success will depend on their ability to execute their strategy and effectively compete in a very dynamic and challenging market. Alright, that is our deep dive into FuboTV Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.